For those of you who are new, welcome to the Wednesday AMA. These are just a little casual time for anyone in the Quai community to ask their questions of Dr. K. Dr. K is the CTO of Dominant Strategies and one of the co-founders of Quai. Is completely, in charge of development, has come up with Poem, all these other things. So definitely a good source of information about anything Quai related. So if you have any questions on Discord, let us know in the chat. On Twitter, same thing. Drop them in the comments. We'll be trying to monitor both, but Discord will get some priority most likely. But yeah, let's jump right in. So we already have a question in the Discord from Kishore, who asks, "How do we find peers currently through broadcasts? I think we'll move to DHT in the golden age. Is that correct? I was curious, what are the benefits of DHT apart from being a decentralized system? Have we started using DHT in our internal testing? I saw we have an open issue, but not much work done on it right now." Dr. K, can you give us an update on peering? Maybe even define what DHT is for those of us with smaller brains?
Yeah, so peering indeed. Discovery is what a DHT uses, or distributed hash table. Basically, what it does is it's a list of sort of peer IDs, as well as what sort of topics those peer IDs can serve. And that list is periodically updated sort of in the network, and then it's shared. So then if you go to a boot node, they can sort of share their DHT with you, so that you can start discovering peers that aren't boot nodes. So it's a discovery mechanism. It isn't necessarily a peering mechanism. The peering mechanism is libp2p, and we're using a version of Gossip Sub, and then we also have a sort of homegrown request handler that uses Gossip Sub, or libp2p rather, to establish connections, but then does the requesting and handling of data fetching independently. So right now we're going through what you might call kind of still some shakeout on libp2p items in a larger network. So we've had this working in, say, 3-node sort of environments. We're currently testing everything now in 30-node environments, sort of globally distributed, some full nodes, some slice nodes, and we're just kind of working through issues that are coming up in that environment. So this is kind of our last, it's the largest environment we test in prior to going to testnet. So and most of our work right now is focused around efficient message propagation, making sure the DHT is working appropriately, etc. In libp2p. That's a lot of where our focus is right now. We've also...
And I'm interested. I wanted to jump in and ask, where do the node wranglers fit into this? Because I think they'll be getting involved pretty early in the testnet as well, correct?
Yeah, so the node wranglers are going to get sort of first access to the testnet. I think somewhere between 3 and 7 days is kind of what we were saying. So one of the issues that we noticed in Iron Age is that you can have a stable network, but if you have an influx of participants and you have a very small number of nodes, the network can become unstable, so to speak. So because there's obviously a lot of demand when we do these test nets, and we only can operate a finite number of nodes, even if we operate, say, 20 nodes ourselves, and those nodes are really big machines. If suddenly 1,000 nodes pop online and they're all trying to sync simultaneously to those 20, it's not great. So what we ended up doing in the Iron Age is we had participants who were effectively qualified into the Node Wrangler program, which means they know how to run a node, they know how to keep a node lively, they know how to run a node that has enough resources, and they also get to report to stats. So we know these people know how to put up nodes, we know they know how to maintain nodes, we know they know how to configure nodes. And so if that set of people, which I think is around 100 now, is the first group to enter the network, then instead of having us to sort of need to sort of create all of this replication ourselves, we basically start out with, say, 10 nodes, and then you bring the node wranglers, and that goes to 100 nodes. And And then suddenly when 1,000 nodes come in, or a couple thousand nodes try to get online all at the same time, you have enough infra to handle it.
Got it. So on the note of the Golden Age testnet, we've got a lot of people in here who I'm sure are looking forward to participating in the Golden Age testnet, maybe earning some rewards. Do you want to maybe give a bit of a teaser on what the reward structure will look like during the upcoming testnet? Obviously, in the previous one, we did mining rewards based on how many blocks you mined. There were some developer bounties available. What are rewards and incentives going to look like for the Golden Age?
Have we talked about this at all, Max?
No, we have not. I'm wondering if you want to give a little
Yeah,
teaser or
yeah. No,
okay.
I'll
Go
just
ahead.
I'll just drop the bomb. So the reward structure for Golden Age Testnet is going to be there will be a snapshot at some point that concludes the Golden Age Testnet, and the chi and quai balances that remain will at some ratio get converted into mainnet quai. That is the primary incentive system in Golden Age. So that means that miners have incentive to mine. Miners have incentive to sort of speculate on hash rates and do conversions between Quai and Xi. And it also means that anybody in the system, like NFT projects, if you are, exchanges or NFT exchange marketplaces, QuiMark, etc. Basically, if you make money, so to speak, if you can figure out how to get people to give you their Golden Age Quai, that Quai will then also convert to mainnet Quai again at some ratio. So there is somewhat of an economic generalized game that has been set up in the system.
Yes, there's definitely we can dig into that a little bit more. I want to talk about that because that creates like basically a whole like testnet economy. So we definitely can get into that a little deeper. But I want to hit some of these community questions that we got in the chat. One from Mosin in the Discord. He asked, can you talk about how merged mining works in the context of Quai and maybe explain how it enhances security without leading to centralization or any security compromises?
Right. So merge mining is the process of making commitments to multiple sort of sets of data at once. So in Quai, you have this hierarchy of chains, sort of prime, region, zone. And that hierarchy allows you to have anywhere from 1 to 255 shards in the system, each shard representing sort of a stateful Ethereum like blockchain. What merge mining does is it allows you to have a mined process where you shard state without sharding work, but you also create the requirement that there are eventual co-commitments to all data by everybody in the system. And that creates an incentive to do sort of cross-shard validation. That creates an incentive for the shards to sort of cooperate when producing proposals. And it also means that like if you ever sort of attest to invalid data, that data will eventually get rolled back. So if you want to sort of think of what merge mining is doing, it's creating one mechanism, i.e. mining, and it's making that mechanism cooperative amongst a hierarchically sharded set of nodes such that we can independently operate them, but also eventually come into a global consistent and consistent state and come into global consensus through that simple mechanism. So it's strictly mined. All data between chains is sort of transmitted through that process of merge mining. And it also is what creates all of the cooperative incentives in the system. So it's basically like a sharded version of Bitcoin in some ways, if you want to sort of think of it like that. Obviously with EVM compatibility and everything, but from a security perspective, relative to the hash algorithm, like that's the dependency of the system.
All right, next question I also have from the Discord from Simon. He's asking about the grants program, and he's asking, do you accept Web2 tooling projects like data view, network data analysis, etc., or are you only looking for like Web3 crypto projects?
I don't think we've considered it. If he could give like a little bit more of an example I might be able to speak to it better.
Got it. Simon, if you want to continue, elaborate a little bit, we can continue on that. Burak asks, Dr. K, which programming languages do you use to develop the network and ecosystem dApps?
So the client is done in Golang, and it's pretty much like 100% Golang. The apps then, sort of the interface is Quais, which is TypeScript. And then the applications that we're dealing with, like Pelagus, that's a blend of TypeScript and JavaScript. And then Block Scout, that's a fork, but that's based in Elixir. And then Stats is not something that was like we it was homegrown, but it's using like an elk stack, or is it? Yeah, it's like Redis, and a bunch of different things. But right, that's really just to get sort of stats that are sent from the nodes displayed in just a visual environment.
Simon elaborated and said, for example, like if he codes a block explorer, would that be something that we would be interested in granting?
Oh yeah, that would be cool.
There you go, Simon. Throw an application in. Kishore asks, you must have run a stochastic market simulation with different conditions to investigate cheese behavior. I was curious if you could share some of the variables of the simulation setup and what were the edge cases, if any.
Yeah, so the setup, this was set up as like an MC sort of simulation. So in Python, but it's like a Markov chain Monte Carlo type simulation setup. So basically, you have like a stepwise progression, and then in each step there are sort of different like agents in the system. So there's like a supply agent, there's a market agent, there's a speculator agent, there's a miner agent, like so to speak, and each one of those sort of operates based off of different sort of inputs, and those inputs can be randomized, and they can include sort of miner costs, miner efficiencies, sort of relative growth rate. So like growth rate is kind of the primary driver in the system. And that's like sort of the most sort of external, unpredictable factor because growth rate is determined by market adoption and utility and FEV and things like that. So like that's sort of like the driving input into the system, and then you have sort of these parametrics that you can like set and create a distribution of. So you need to create like randomized distributions. So then you have many miners. The miners don't all act the same depending on price, depending on conversion, etc. And then like you basically go through steps, and then you can set positive growth rates, negative growth rates, differing growth rates, etc., and then see how the system responds. The hard part, or one of the harder parts about this, was actually because the system has to operate over many orders of magnitude, both in hash as well as in relative value changes between Quai and Chi. If people understand like how controllers work, controllers usually work on what we would think of as like linear systems. But if you're going across many orders of magnitude, that's no longer like a linear system. That's going to be nonlinear. And figuring out how to create a controller that can behave well over the nonlinearity was a bit of a trick. Luckily, we know kind of what the baseline of that nonlinearity is, so we are actually sort of able to bring that into the model of the controller. So it's technically a model-based controller, but that was sort of one challenge. And then the other challenge is sort of how do you get good signal because the K value that sort of modulates the endogenous exchange rate is based upon both conversions as well as like minor choices. And effectively, what you're trying to do is you're trying to make it so that the preference for Quai is equal to the preference for Chi. And if you do that, then you're saying the market has a agnostic preference between the two, and then that controller has matched market preference, i.e., the value of the conversion rate is correct. So sort of we need to take this like long running sample, but we also need to be responsive, and like taking averages and also getting a responsive system can be a little bit of a challenge, but we figured out how to do it.
And Kishore also asked if there's anywhere to see the results of those like simulations, like the Monte Carlo simulation you mentioned.
So it's like in my stack to publish something on this, and I think the right place for it would be sort of like a peer-reviewed setting. Once we get done with we get done with Golden Age, I'll probably have some cycles to do that.
Okay, and I'll ask the question that we get every time. Do you have any tips on when the Golden Age testnet will be?
As like it's going to be sooner than later. I would expect us to be able to announce something in the next month. But right, testing is what testing is. So until we get the car running smoothly, we can't sort of announce launch. So it's somewhat dependent on how fast we can squash all these bugs and make sure that we have good, stable features that we're pushing out. So if you had to like, yeah, that's right. So like I have an expectation that we will announce something in the next 4 weeks. But I also don't have omnipotent purview over the problems we may discover and how long they may take to fix. So if that makes sense.
Fair response. Question from Ice Cold Abundant in the Discord chat. He asked, this might be naive, but is it possible to make a protocol to store images on chain, like with the Ordinals protocol, since Quai is more efficient than Ethereum?
Yeah, I mean, you can do it. You're going to pay for your bytes. It can 100% be done. I think early on people will do that. I think longer term, it's probably going to be efficient to make commitments somewhere else and then use sort of a different data availability layer like IPFS. Is kind of what I would anticipate. But if you're willing to pay for the bytes, like they can go on chain.
And on a similar vein, I don't think anyone asked this question, but I got it in this morning's meme stream. People were talking about runes. I was wondering if you'd looked into runes at all, if you had any thoughts on them. What do you think? Do you find them interesting? Is there any, application for Quai there or no?
So I actually I've been spending a little bit of time in Twitter Spaces. I don't know if people have noticed this. Listening to some of these other projects, and I actually got brought into a Twitter Space maybe a week ago, and they were talking about runes, and they were talking about ordinals, and we were talking about like core DAO and things. And it actually got me thinking, like, sort of what is it that Quai brings outside of the network, right? So like, if you're in the system, it's like the perfect system. But if you look at something like core DAO on Bitcoin, they're trying to bring like the EVM to Bitcoin. And I started actually thinking about Quai as like a digital nation state. And this came from like a conversation about runes. Like, I don't mean to completely divert away from your question, but it got me thinking about like, if Quai is a nation state, like what are its exports? And the most interesting thing about it is if you think about like the EVM requires people to effectively export assets to you so they can take advantage of the EVM. So if you have like a performant low cost EVM and you set up a bridge, people want to export those assets so they can like operate in that low cost performant environment. Okay, so you can get sort of imports that way, and that's good because that brings in TVL. But the thing that's like super interesting about Chi and stable tokens, if you actually think about what stable tokens are exports from the current financial system into the crypto system. And it causes like a codependency, but so crypto becomes sort of dependent on the banks that sort of collateralize dollars. But the crypto systems benefit because then they have like the stable, but the banking system also benefits because they have somebody that's willing to consume their dollars, right? So there's actually like this weird thing that's set up. People say the government doesn't like stables. That's not true, actually. The Federal Reserve, which is a non-governmental entity, it's a system that's owned by private bankers, is the one that gets to currently issue dollars monopolistically in the United States. The Treasury just wants somebody that's willing to create dollars and buy their bonds. So there's actually like a divide here, and it's interesting because like if Tether, say, takes treasuries and uses that to collateralize tethers, then they are not supplanting the government, the Treasury. They're actually just supplanting the Fed. And from the Treasury's perspective, they shouldn't really care who's doing it as long as somebody's buying their bonds. So like that's kind of interesting. But the other thing that's interesting about it is like the dollar. And the dollar is sort of the greatest export that the United States has. Because after World War II, we had this agreement called the Bretton Woods Agreement, which basically made it so that all countries sort of agreed that instead of having gold as a collateralized asset in the central banks, they would have dollars, and then the dollars would be redeemable for gold. And then eventually, the United States reneged on that agreement and sort of closed the gold window notoriously in 1971 with Richard Nixon. But it remains that the dollar is like the greatest export of the United States. And I was thinking about Chi, and I was like, everyone's always been thinking about this as like importing something. But if Chi is perceived in the market to be a stable, Chi could be Quai's greatest export. Just like the dollar is the United States' greatest export. And then the crazy part about Chi is every Chi that is created came at the expense of Quai, meaning either someone forwent Quai when they were mining to get Chi, or someone took their Quai and converted it to Chi. So the more Chi there is, the less Quai there is. And then the really crazy part is there's like this huge demand for stables in the market. There's like $160 billion worth of stables right now. So if Chi could be our greatest export and you just take a fraction of the stable market that exists in crypto, say it's $100 million, that means that there's $100 million of pulled demand going away from the minting of Quai. So like Chi will be Quai's greatest export. But that came from a conversation about runes.
That was probably a more interesting little thread to pull than talking about runes. But yeah, no, I think that's an interesting take, and I'm interested to hear more about that. I think I would love to see Dr. K. I know that you're always busy, writing code and everything, but it'd be cool maybe after the Golden Age Testnet or maybe after mainnet if you spun up a blog like similar to what Vitalik has done, where he just like posts his musings on different topics.
Yeah, there's like a handful of ideas that I think I've maybe come up with that are interesting. So yeah, I've been meaning to kind of do a blog and write some of these things down. It just hasn't sufficiently bubbled up through the priority stack.
And that's understandable, I think, especially till mainnet. I want to ask another question here from Kishore, who asks, have you been following the El Salvador experiment of Bitcoin as a legal tender? I recently read a Reuters report. Some 88% of Salvadorians did not use it in 2023, and just 1% of remittances were sent in BTC, with very bad reviews of Chivo, their digital wallet. What are your thoughts on the El Salvador experiment, Dr. K?
I think the lack of success is probably speaking to the lack of Bitcoin as a technologically sufficient system to create a monetary asset globally. Right? It has figured out how to create digital scarcity, but digital scarcity in a proof of work setting is only economically sustainable or even viable in terms of creating a practical UI UX for people trying to use this thing if it can offer high TPS to sort of guarantee, uh, transaction fees that are at low fixed pricing over time, right? Like think about this just from like a Web two perspective. If you're a Web two company and you say, "Hey man, I want to put my loyalty points onto a blockchain," and you go to a blockchain company and they're like, "Great, put your loyalty points on Ethereum, and today it's going to cost you a penny to like make these points." And they're like, okay, that's kind of expensive, but okay, I'll go with it. And then suddenly, 18 months later, it's $80. I mean, like that's crazy. Like no one can actually run businesses if that is your economic model here. No one can build real economic activity on these things that's sustainable. And it's funny that every time someone finds like a product market fit, the technological insufficiency of the chains themselves like strangles the baby in its grave, right? So, um, sort of offshore banking accounts and remittances, so to speak, for countries that have unstable currencies like Argentina, specifically Buenos Aires, and like Turkey, right? Buenos Aires was sitting here adopting crypto, right? They have this issue, the Argentine pesos hyperinflating, so they want to figure out how to hold money. They don't have access to offshore banking, so people start using crypto. Okay, but they need something that's a unit of account so that they can price goods and services and settle them. So they say, okay, well, USDC is a unit of account hypothecated in this case on BNB. They said, okay, we can handle this because BNB right now is only like a penny. And then suddenly BNB got popular, and popular is, a relatively small term here, right? Because the number of sort of people you need using this thing to make it overly popular and to cause your fees to rise by 100x is like a couple million, like not even daily actives, right? And then suddenly a million people make it so that the system doesn't work anymore. And then the Argentines were like, well, shit, I can't pay $1 a transaction when the median income here is $7,000 or $12,000, whatever it is, because that's just too expensive for transactions. So then they said, oh, well, this Tron thing is cool. And then Tron came in and did their advertising, made their stable token. So then they started using Tron. And then suddenly Tron got popular. And then the same, maybe 2 million people jumped in the system. And then all of a sudden they can't use it anymore. Right? And like that's the fundamental problem. For any of this to work, like you have to be able to scale with use case. And like let's put this in perspective. At the peak of the last bull cycle, I have good numbers about sort of what usership was. And the peak usership was like 300,000 daily actives on Ethereum and 1.5 million daily actives on BNB. So like crypto's sort of peak time in the last bull cycle was like 1.8 million daily actives. And somehow this industry has like a $1.5 trillion market cap. And every time you get anywhere close to that in a single system, like it breaks. Like we are just sitting in like a fucking milieu of shit. And the only way out of it is to solve like how to scale that L1 so that we can actually make meaningful value added contributions to society.
So what are your thoughts on, obviously, we've talked about this before, but I want to emphasize it again. What are your thoughts on like the L2 scaling as a solution to the L1 being unable to scale? Like obviously Ethereum had that sharding stuff in their roadmap and abandoned that for L2 scaling. What are your thoughts on that? Why is that insufficient? Why can't people in Argentina just use, Base?
Why can't they just use US dollars? Right? Like it's the same answer. If you want a system that isn't controlled, that's a credibly neutral form of money, you can't put it on Base because Base just turns into the Federal Reserve. And then the Federal Reserve controls the system. They create a monopolistic relationship with the government, and then we end up in the exact same plutocratic hyper-financialization world that we exist in, where we get taxed and hyperinflated out of existence. Like, that is why you don't use Base, right? And then, I mean, I could argue and say, why do you use Base? Why don't you use Zelle? Or why don't you use, Venmo, right? It's the same set of answers.
Yeah, I mean, I know obviously this is a Dr. K AMA, not a Max AMA, but I'll jump in and say I pretty much agree. I think the majority of crypto, like crypto is kind of split into two directions in my eyes. There's crypto that's still building for like the nation state censorship resistance, and then there's cryptocurrencies that are like just trying to be decentralized enough to like not be a security or whatever.
Like, well, but that doesn't even create money. Like, if we look at what Solana is creating a casino token. Like, that's what it is. It's like no, there's demand. I mean, there is demand, like the same way the Bellagio like has tokens, and like people hold on to those tokens and they trade tokens in Las Vegas. Like, there is demand for Solana, but that will never become a global currency. Right? Like that's the difference. And like I just want to take a shot at Base here. The biggest mistake that they made is false advertising, because they named it Base when they should have just named it Database.
Nice one, Dr. K. Very nice. Okay, I want to hear your answer to this one. Burak asks, Satoshi instilled within the Genesis blocks raw data. Of course, you know, the time 03 January 2009, Chancellor on the brink of second bailout for banks. Today, at the point where crypto ecosystem is, people are following the speech of Fed officials or the Iran-Israel war, whether a bank in San Francisco will go bankrupt or inflation. Where do you think crypto, like, how do you think crypto is right now in terms of where it started? Do you think it's still trying to be like independent from the new financial system? Or do you think it's trying to like supplement or like weasel its way into the existing financial system?
Yeah, I mean, this is a good question. I think crypto has lost its way, and I'm not gonna like morally judge that. Basically, what happened is there were these like cool libertarian ideas about, and they're not even like libertarian. They're just like, and I wouldn't even say they're Christian. They're just the fundamental thing that like underlies cryptocurrency is the golden rule. Like, what we're trying to do is we're trying to get humans to collaborate under the auspices of the golden rule, which is sort of mutual voluntary interactions, right? Like, that's like the point, okay? And Satoshi came up with this cool system that used work-based hashes to create an objective system that's decentralized, that solves the Byzantine general problem. And suddenly that was like the spark that was needed to create sort of an economically decentralized mechanism of creating digital scarcity. Now, the problem was we couldn't figure out how to get that to scale. And without scale, we can never become money. So the problem of scaling is really, really hard, right? Because to do it, you have to do sharding. But like, how do I shard and how do I maintain that in a work-based system, right? How do I get throughput? How do I have subnets, right? Everything that like we're trying to solve are the technological problems that if you went back to 2012 and asked people like, what are the problems that we would have to solve to make this work as money? These are those problems. It's just, they're really, really hard problems to solve, and nobody has done it. So because they looked at it and they said, well, this is too fucking hard, they're like, okay, well, let's tweak it a little bit. Let's, instead of doing this work-based system, we could do the stake-based system. Then we won't have this sort of this sharding issue, because we can just like make multiple attestations against different things. Let's not worry about subnets for now. Let's just have these like aged in proofs over time and come up with like a concept of some randomized validator. But in making those compromises, they destroyed the decentralized economic properties that were Bitcoin. So like, they've kind of come up with something that kind of works really bad, but it doesn't even have the original properties. So like, because the solution down sort of the real path was too hard, everybody has taken this like alternate path where they like find a new widget to like add to the widget pile, market it as a new thing, and like make their money. And like that's what people have been doing for the last decade. There's like very few examples where that hasn't been the case. Now, some people have like gone into niches and have tried to solve very like hyper specific technical problems. Like Grin was interesting, Mimblewimble was interesting, Monero is interesting, ringsigs are interesting, ZK snarks are interesting. They're not interesting as a scaling mechanism, but they're interesting, right? So like good work has been done, but the work that has been needed to be done to solve technologically the problem of how do you scale these systems while maintaining the economic decentralization that Bitcoin brought to bear, we're the only ones that are doing it in the entire space. And it might be because I'm the only one crazy enough to do it. I don't know. But like they're really hard problems and everybody has failed at this. And if people understand what we did in Iron Age, we fucking climbed up a mountain. It was the tallest mountain in this space that was littered with billions of dollars in thousands of bodies. And we made it to the fucking top. And like the thing that we need to make this system work has already been demonstrated for the last 6 months. Everything else is just icing. We're just putting a cool paint job on the car, boys. So anyway, long answer. I don't even know where we started.
So, I mean, got me hyped up. Yeah, someone in the chat said, if that's the case, stay crazy, Dr. K. I'd agree with that. I have a question from Ted Star here. I want to take it back to the golden age a little bit and talk about that because I'm very much looking forward to what we got coming. But what are you most excited for in the golden age?
Like, so there's a lot of like cool technical answers, right? So we have a lot of sort of cool stuff going on, right? It's just going to make the experience like good, right? In Iron Age, we were like really focused on just getting consensus to work, just getting sharding to work in a decentralized way, right? But like snap syncing is going to be great. You know, turn on your node within a couple hours, you're like back to the tip. We don't have to do snapshots. You don't have to like worry about long sync times. Beautiful. You know, Chi is going to be in the system, right? Chi is this important thing because it will, you know, it's like a whole new feature set, right? Like, and the crazy part about like this whole project is like each one of these things that are kind of just like, sort of just like these little sticky notes, little footnotes in our system. Other projects, this would be the whole project. So like, how do you create an endogenous stable token on chain? That's just like an adder for us. But you could literally do an entire project, like an entire crypto thing just about that. Like how to do topologically optimized subnets. That could be an entire crypto project. How to shard a work-based system. That could be an entire crypto project. How to have new consensus with POEM. Entire crypto project. Which is kind of crazy to me in some ways. But anyway, we have like 10 crypto projects all rolled into one, all working together in like the simplest, most unified way possible. And like, hopefully generating tremendous utility and value for people. You know, libp2p is going to be a great system. You're going to immediately sync in. You're going to find peers. Peering is going to be stable. Chi is going to be super interesting. You're going to be able to convert between, you know, Quai and Chi. You're going to be able to have this endogenous stable token. You're going to be able to speculate on hash rates. That's going to be really cool. We have work shares coming in. This, I don't know if anyone really knows about. I might have like mentioned this once before, but basically there's like a distributed mining pool in protocol. So instead of having to sort of get a full block to earn money, yeah, it's based off work objects for sure. But effectively, if you get like a share of a block, that can be included in a block. It can be added to the weight of a block, and it can get rewarded proportional to the share of work that was done. So we think we'll be able to add maybe like 10 shares per block, which means that, you know, if you were sort of finding a block once a week and only getting paid once a week as a miner, because you only had one GPU, you'll get paid 10 times as often. So maybe you'll get paid every day. And if you're finding many blocks a day, you'll get paid like every couple minutes, right? But you'll be getting paid 10 times as fast in terms of your work because it's effectively a decentralized mining protocol in the protocol itself. And that was actually like a simple extension of POEM in some ways, but it's also like a very important one because what's actually happening in the system is when we take a block is a sample of a process. And that sample is saying, what does the network know about and what is sort of being worked on at the tip, right? And then like that's one sample of it. And the problem is if I take one sample of any process, I don't have good certainty if that sample is correct. That sample can have very high variance. But what this like workshares does is instead of taking one sample per block, I'm actually taking 10 samples per block. So my statistical uncertainty in that block is like very low. So it improves this property that we call concentration in the network, which means the statistical finalization of the system is effectively one block. There's still economic finalization that has to take place, but like if a block is found and it is the heaviest block, like that's going to be the block. So it just increases concentration, increases finality, or shortens the time to finality in the system, which is really cool. And like that's why we're introducing it. But then it also has this sort of secondary property of allowing people to sort of get paid more often as miners. So there's less need to go to pools. So that's getting introduced. I don't know what else is getting introduced, Max. Do you remember?
Like UTXO set is going to be like huge in itself. I mean, I honestly prefer UTXO chains to account chains. Like, I think it'll be really fun to like have that in Quai, be able to play with that. I think my goal is to like, I know that y'all have specifically made Quai as like not program or Chi rather as like not programmable as possible. My goal is to find some way to make non-fungible tokens on Chi. But no, I mean I think like you said, there's like a ton of different features being introduced. I think what I'm most excited for in the golden age is just the new reward structure. Like I think it's always cool like in mainnet when these new ecosystems pop up to like see what people decide to speculate on. And so I think the structure that we'll be doing for the rewards will kind of emulate that before mainnet actually happens. So it'll be like a nice way to incentivize, if you want to make a meme coin, like no need to wait till mainnet, just like get it going during the next testnet, earn some more rewards for it, and it'll give us like a nice ecosystem baseline going into mainnet, I think. So I'm looking forward to the rewards a lot and
Yeah, I mean, let me just speak like real quick to sort of why we wanted to do that. The reason we wanted to sort of create this generalized economic game as the reward structure in Golden Age Testnet is because everything about like Quai, everything about cryptocurrency, it comes from a place of humility in that the concept of laissez-faire markets is basically saying any individual doesn't know or can't anticipate what the market efficient outcome will be, right? So the idea here is that if we create a market, like the market will do better testing, it will come up with more edge cases, it will come up with games that we couldn't have anticipated, um, and that is the point, right? Like that is going to create way more interesting outcomes and way better outcomes than anything that any one of us could conceive of. And so that's why we're doing it because like we believe that it's hard to describe complex systems. It's hard to anticipate complex emergent behavior. So to test a system that's designed to have complex emergent behavior, the only way to test it is to encourage that behavior. And like that's why we're creating a little bit of a market based game.